You are tuned in to Agriculture Today from the campus of Kansas State University. Thanks for being along once more as the centerpiece for this week's grain market commentary is that eagerly anticipated USDA World Agricultural Supply and Demand Estimates report, and of course, centering and focusing on the crop production numbers from that report out yesterday morning. Dan O'Brien is standing by to hash through what those numbers are saying to the markets. He's a grain market economist with K-State Research and Extension. We'll go crop by crop here, Dan, as we work through these. And the corn number on U.S. yields was scaled back considerably, and that caught the market's attention right away.
Yes, the key points in the corn market kind of tell themselves. When the news came out that the USDA had projected corn yields for 2021 at 174.6 bushels per acre, rather than something along the lines of 177, 179, we had some 180 pluses coming in as a pre-report expectations in this report. When they came in with that, then and also had projected the size of this year's crop at 14.75 billion bushels, down about, well, over 415 million from the earlier July estimate. Well, that was a big deal, and it's a really big deal. And so by the time that change in the size of the crop worked its way through the U.S. balance sheet, you'd seen, but basically, I think we saw where the USDA is going to go if we get any shorter go in terms of the usage side for their estimates. If we cut back the size of this 2021 corn crop anymore in the September 10th and in successive crop production reports, and basically they left ethanol production unchanged, but cut back feed usage by 100 million bushels and shaved back exports by 100 million bushels also. So that inelastic demand from the renewable fuel standard on the ethanol side tied in with decent economic activity in the U.S. Tending to hold up ethanol production. And as long as that inelastic demand stays in, then as corn prices move higher, then you're seeing the exports and feed usage thought to be where you see rationing occur. We ended up with the USDA projecting 1.424, basically 1.125 billion bushels of corn carryout, stocks to use at 8.5%. They did raise their projection for corn prices in the coming year to 575. Now, what's interesting, I hear we sit in Kansas and we see what the USDA's projected for their for the 2021 average corn price, and we look at some of these new crop bids that we have right in front of us, or I think we have right in front of us. Here we go. So we look at new crop bid in Colby yesterday after the report, after the markets closed, 561. Salina 563, Topeka 547, Garden City, Demand Center, et cetera, 588. Hutchinson 573, Columbus 553. So the USDA is projecting 575, and our new crop bids at harvest are really that or below, except in Garden City, where we'd have in most cases have the strongest price. So it is as it is, and interesting as you look at the particulars on the export side. The USDA did shave back both this current marketing year exports, which will end, and which is this marketing year will be done on August 31st, and then September 1 to start the new one. Shave that back by 75 million bushels, and also, again, as we'd already talked about, the projection for this coming year by 100 also. So what I thought was really interesting, I talked about this before we went on air, was that when these numbers first came out, we saw corn futures jump. That we closed yesterday at 567, but it traded as high as 589.5. So when I guess this was a shock to the market, but then as people thought about it, et cetera, they probably realized there's more information to be dealt with, more time to go through. One question I have is, with the heat we've had, even in the Central Corn Belt, I wonder about ear fill from pollination issues that from all the challenging weather we had coming through that last part of July. Of course, now we're in August and we've got some heat at different places, but put a map in our handout information the supporting information that goes to this radio broadcast, showing that in terms of U.S. corn production, 35% of U.S. corn production is in areas that are affected to some degree by drought. So I think that's the issue. If you're sitting in Illinois or Indiana or Ohio and wondering about where the corn crop's going, well, it looks awfully good. But the balance that the USDA did, and I applaud them for it. We don't always applaud the USDA for what they're doing, but on this, they probably went state by state, saw what they had, brought it all back together in aggregate, and the 74.6, basically 175 is where the average came out at.
Soybeans now, maybe not as intriguing as the corn numbers were, but there was a notable drop, Dan, in domestic production, although the per bushel, per acre yield was kept static.
Yes, I thought what was interesting out of that whole thing, again, they dropped after dropping the size of the U.S. corn crop soybean crop by 66 million bushels down to 4.339 billion. And shaving basically, instead of 50.8 bushels per acre down to 50, they made changes in the balance sheet, et cetera, but kept the bottom line ending stocks unchanged. So look, I've dealt with supply demand balance sheets. I put a few together myself. I know what's going on. Hey, I'm not going to move off that ending stocks figure until I've got. So they stayed at 155 and adjusted the use to make it fit. And so that tells me that, hey, we're in August when so much is happening on soybeans. So let's get to September and October, and we'll have a better feel for what the size of that crop is. That they acknowledge that, hey, there's some damage in those areas. When you look at soybeans, 30% of the U.S. soybean production is dealing with drought. I see that, and if that 30%, if it's hammered pretty good, then how much better are you going to have the rest of the country to still make 50 bushel per acre? So I think that I guess I'm enslaved to old ad hoc grain market rules that corn's made in July and soybeans are made in August, and we're still in August. So let's see where this thing goes as you go on.
But as you say, not only the dryness, but this intense heat through a wide swath of the country, actually. Well, that's going to ring. That's going to influence somehow here in the relative near future.
Speaking of ringing, I mean, I guess economists are known for their hand wringing, So as a hand wringer, I remember some years when the hot temperatures at night snuck up on us and affected crop yields during these summers. And even though we've had some rainfall and some moisture, still there's heat to be dealt with. And I would also say that the August reports for corn and soybeans are the USDA, it does farmer surveys. They look at satellite imagery, take all the information they can, but they're not out in the field aggressively doing their own enumerated measures. Mm-hmm. That comes in September. So there's more information, a broader, in-depth survey to be done. And it'll represent where the crop's at on September 1. And so that's really the thing that I'm looking forward to right now.
What was reported then, Dan, on the wheat side? That stocks number was tightened down much more than most thought going in. Maybe that's the headliner.
I think, speaking with sobriety on this topic, sober-mindedness, we've got ending stocks projected for this marketing year with virtually 99% of the U.S. spring wheat crop in the drought area, 100% of the durum crop, all suffering from drought. And and saw the USDA lower its projection of U.S. wheat production, total wheat production. We have pretty not bad, pretty good. Hard red winter, struggling in the white wheat, in these other areas, basically in hard red spring durum. They dropped U.S. production by 49 million bushels. In this report, and again, stay tuned. There's more coming. The big report for wheat actually comes at the end of September. So we're ahead of where the real information is coming in the wheat market from the USDA anyway. And they ended up with a number. What I think is an important number is there we have ending stocks projected now at 627 million bushels, and we were at 844 in the 2000. Well, that'd be for the 21-22 marketing year. This last one we just came out of ended May 31st. We were at 844 million. We've been closer to $1 billion in several years prior to that. So we're down to the place where ending stocks to use for wheat is at 30%. Well, you know, we're pretty comfortable at 40, 45. We've been around 50 for a good while. Well, we're sitting here at 30, and we're still wondering what we're going to end up and have out of those northern areas. So just interesting as all get out to see. I would say, kind of a surprise in the midst of all this, we had the best hard red winter wheat export week we've had for a good while. 10.5 million bushels exported the week ending August the 5th. And I think that we really need to get the people from grain science in to talk about how people that make flour can handle more abundant 10.5 to 11% protein hard red winter wheat with tight supplies and some of it damaged of spring wheat at higher protein, and still end up and make the products that they need for flour for the baking industry. So that's really where this is at right now. It's an issue of how the millers can take this mixed bag of what we've got down here in our hard red winter wheat area and what they have up in the spring wheat area that's damaged, although high protein, but it's high protein, but in the overall quality measure of that crop, you've got other baking characteristics to consider. So anyway, we've got quite a deal for the baking industry to consider. So we were wondering about wheat feeding all through the summer, but now as a focus in what was holding up the hard red winter wheat market, well, now I think that focus has shifted over to the problems we've had in spring wheat and what we have to do to make sure we have quality baking products to meet consumer demand here in the U.S.
And not to mention, looking forward, as this dryness persists, we are ever closer yet to winter wheat planting season here in the state of Kansas and the Central Plains. If this lasts, that's going to be a market factor of some magnitude, isn't it?
Yes. On that same set of information we've got here, I've got as of August 10th, U.S. Drought Monitor data showing dry areas in hard red winter wheat, how the overlay map of our droughty areas compares to the hard red winter wheat area. And so far, Northwest Kansas, Southwest Nebraska, a chunk of right in the heart of central Kansas, some down by the Oklahoma-Kansas border showing some drought, but it's pretty dry. And I think the answer to maybe where the hard red winter wheat market goes, one of the answers to consider will be what our climatologists like Mary Knapp, what she has to say about our expectations on what we'll have as we go to planting these crops, as we go to seeding hard red winter wheat this year. So given we're so tight on ending stocks, crop prospects for seeding this year will have that much more impact on the wheat market, I'm thinking.
We'll tap Mary for her thoughts on that very thing later on in the broadcast, and would direct you producers to Dan's notes on the grain markets following the USDA's latest grain supply and demand report out yesterday. Those are posted now on agmanager.info. As always, Dan, much obliged for your comments.
Thanks, Eric. Take care.
He is K-State Research and Extension grain market economist Dan O'Brien, along with us from his office in Colby, Northwest Kansas, and you're listening to Agriculture Today.